Hello everybody and welcome to this video where we will be running over the top 5 beverage and snack companies. We have today selected the following 5 companies. Coca-Cola, stock ticker KO, does not need any further introduction. Pepsico, stock ticker PEP, again, no need for further introduction. Then we have Keurig Dr. Pepper, not sure that is pronounced correctly, but stock ticker KDP. Then we have Monster Energy, stock ticker MNST, which are obviously known for the energy drinks. And lastly, we have National Beverage Corporation, stock ticker FIZZ. First, we obviously want to understand how these companies have been performing over the most recent periods. And as we can see here, we have Coca-Cola, Pepsi and KDP, which have struggled initially during the coronavirus, but has since gained a bit back in the last 6 months. On the other hand, we have Monster Energy and Fizz, which have done extremely well this year and has had a net gain of 27% and 41%. So the trend for these two companies is definitely upwards. For the other one, it's a little bit mixture, but given the last 6 months, we can see that they are also in a little bit of what we would consider an uptrend. Next, we want to see, are these companies earning any money? In the end of the day, are they profitable? So first we take a look at the net income here and we can see it is green across the board, which is a very good sign. Next, we go and check some of the margins, and I obviously am very interested in looking at the net profit margin. And what we can see here, benchmark against the industry, beverage industry, we have Coca-Cola doing really well with 26.73%, Pepsi doing a bit worse with only 10.19%, the same for KDP. Monster Energy, similar to Coca-Cola, doing really well with 26.54%. And then we have Fizz with 12.95%, which is okay, but nothing more than that. Then we have a look at the Beanish M-score, which is a mathematical model that determines whether a company potentially has manipulated its profits. We want this to be less than minus 2.22, and we can see all of them except Fizz are in the safe zone. Fizz is looking at slightly bad here with a minus 0.72. Next, we take a look at the Sloan ratio, which is just to identify if a big part of the earnings are considered non-cash accruals, which we are obviously not interested in. So we want the numbers to be between minus 10 to 10%. And again, looking across the board here, it's looking really good and there is no need to be concerned with this. So in the most recent video on fintech payment stocks, we introduced this status overview to give a more easy benchmark across some of the most important metrics on the different companies. First, we have a look at the stock and the trend, and we consider that all of them to be in an uptrend, although Monster Energy and National Beverage Corporation is definitely done better than the others so far in 2020. Then we go to the income part and the net income. All of them had positive results, which was really good to see. Then we take a look at the net profit margin, average for the last 4 quarters. And what we can see here is that Coca-Cola is doing the best, followed by Monster Energy, National Beverage Corporation, KDP, and then Pepsico. It's important for me to state for some of the new viewers that this ranking only shows who has the best scoring. It doesn't show how big of a gap or difference there is between the different scorings. Okay, so some of them may only differentiate with only a few percentages. Next, we want to understand how these companies are performing, whether they have high returns and whether big cash flow margins is being generated. So first, if we take the earnings yield here, we can see that Coca-Cola is doing the best, followed by National Beverage Corporations, Pepsi, KDP, and then finally Monster Energy. However, overall, I would say it's looking fairly okay. If we then go to the return on invested capital, we can see that National Beverage Corporation, Monster Energy, by a far margin is outcompeting all the other companies. Go to the levered free cash flow margin, which is also very important to us. We can see that the numbers across the board are looking fairly well, except for Pepsico, which only has an 8.3%. Next, we want to look into the balance sheet, see how strong the financial position are of these companies. Do they have liquidity? Do they have a lot of long-term debt or not? At first, we take a look at the current ratio here, and we can see that both Monster Energy and National Beverage Corporation is doing really well, whereas Coca-Cola, Pepsico, and KDP is doing slightly worse. The same thing is the case for the cash ratio, where again these companies are not doing too well, but it's looking really solid for Monster Energy and Fizz Corporation. Check out the total ratio or total assets versus total liabilities. We have a similar story again here, where these three companies are underperforming compared to Monster Energy and National Beverage Corporation. And if we take a look at the debt equity, again, similar story. It's not too bad for Coca-Cola. Pepsico, a small red flag here with a debt equity ratio of 3. KDP, fine, and really good with Monster Energy and Fizz Corporation, which basically do not have any long-term debt. So this gives them a lot of room for maneuver to obtain any debt if they need to grow their businesses. So this is really, really solid numbers. You can also take a look at the Altman Z score, which is just a credit strength test that assesses the likelihood of bankruptcy. And all of them are doing fine with the exception of KDP, which score 1.22. So this is a little bit of a red flag. You can also have a look at the Piotrowski score, which is another way to assess the strength of the company's financial position. And here we can see it's looking fairly okay overall. I would like to have above 5 in general, so it looks pretty good without being extraordinary. But the Piotrowski score also looks for a very short duration, only the last 12 months, so it cannot necessarily tell the full story. Back in the status overview, we can now see that for the return metrics, and more specifically the return on invested capital, National Beverage Corporation is doing the best, followed by Monster Energy. For the levered free cash flow margin, Coca-Cola is doing very well as Monster Energy. On the balance sheet, and more specifically the total ratio, Monster Energy followed by National Beverage Corporation is doing the best, while as Pepsico is doing the worst. The same story more or less repeats itself, where Monster Energy and National Beverage Corporation both gets a 1 here, and that's because both of them has 0 debt equity, and Pepsico is again doing the worst on this metric. Next, we want to take a look at the shareholder yield and basically how much value is returned to shareholders either through dividends and or buyback. So if you first take a look at the dividend yield, Coca-Cola has a generous 3.19%, similar with Pepsico with 2.88%, KDP subpar 2.12%, and Monster Energy and Fizz Corporation are not paying any dividend as of today. Then if we go to the buyback yield, we can see that Coca-Cola here has a minus, which means that they have issued new shares over the last 12 months. Pepsico doing fairly fine compared to the industry with 1.55. KDP, similar story to Coca-Cola. Monster Energy, really well here with 5.25%. And Fizz has a small one at 0.13%. So nothing to really take notice of. We do also want to understand whether these modified payout ratios are sustainable in the future. So this one tells us the proportion of the earnings that are paid to the shareholders in form of dividends and buyback. So basically it means that if this value is above 100, it is unsustainable numbers that these companies are paying out. So in general, we want that to be as low as possible because that means that the companies can actually pay more earnings out to the shareholders if they really wanted to. So Coca-Cola fine here. Pepsico doing really well. KDP, big red flag. This is not sustainable in the future. Monster Energy and Fizz, depending on the next quarters, if this gets worse, it may not be sustainable, but it could also just be a one-time thing. So we have to wait and see for that. Next, we want to have a look at the earnings per share and growth. And as we can see here, the PE ratio, which is the price of the share relative to its earnings. Coca-Cola looking fine with 23.77. Pepsico is also okay with 27.21. KDP, a small red flag when you benchmark against the industry. They have 34.54. Monster Energy looking really overvalued here with 305. I would say this could only justify if they have an extreme growth, which is unfortunately not the case. So this is a clear signal that Monster Energy may be overvalued as of today. Fizz Energy, on the other hand, looking really fine here with 23.04. So if we go to the growth rate that is forecasted for the next 5 years, we can see that both Coca-Cola and Pepsico has small expected growth for the next 5 years, so we shouldn't expect any major from them. KDP doing fairly okay with 11.31%. Monster Energy has a respectable 14.14%. However, it is not that crazy high compared to the P ratio justification. Fizz Energy looking really good here with 25.56%. So it's really something to take note of. On the revenue growth for the past 5 years, I obviously understand that you cannot use the past to predict the future. However, I sometimes feel that this is still telling a story to us. And if we look at Coca-Cola first, we can see that they actually have had a decrease over the last 5 years. Pepsico has been more or less stagnant. KDP has done really well with 23.39, but still subpar to the industry. Monster Energy and Fizz are doing fairly okay, but nothing crazy here with around 9 to 10%. Now we go back to the status overview, and first we had a look at the total shareholder yield, and what we could see was that Pepsico and Coca-Cola were providing the best return. So for dividend value investors, these two may be the best picks, while as all the other ones for KDP, Monster Energy, and National Beverage Corporations were quite poor. Next, we took a look at the earnings per growth forecast for the next 5 years, and here we could see that National Beverage Corporation were doing the best, or is expected to do the best, followed by Monster Energy, KDP, Pepsico, and Coca-Cola. If we take a look at the revenue growth for the past 5 years, KDP was doing the best, followed by Monster Energy, National Beverage Corporation, and Pepsico and Coca-Cola. I think where we are so far in the overview, it is quite surprising to me that Pepsico are actually doing quite poorly on a lot of the metrics. I thought that they were doing a lot better than what they actually have. Next, we want to understand whether these companies are currently under or overvalued, and we have several different ways that we can try to find out if this is the case or not. One of them is to look at the PEG ratio, price earnings growth ratio, and basically we want that number to be below 1. Below 1, it shows that a company is undervalued. Above 1, they are considered overvalued. So if we look across the board here, all of the companies from this metric perspective are considered overvalued, except for National Beverage Corporation, which actually shows to be undervalued. So really interesting. Next, we look at my own fair value intrinsic estimator. So basically based on several different numbers and factors, try to estimate what are these companies really worth. And this is again another way to try to find out if they're a good purchase as of today or not. And if we look at Coca-Cola, Pepsico, and KDP, they actually come out, all of them, as being undervalued with a small margin, while as both Monster Energy and Fish Corporation looks to be overvalued. Quite surprised about Fish compared to the numbers that we have seen so far. However, there is obviously uncertainties related to the numbers that we are using. Lastly, we have the beta ratio, which is basically a risk volatility that shows how much they move in relation to the overall market. And if it's below 1, they are moving less than the overall market. If it's above 1, they move more than the market. And what we can see overall is that it's only National Beverage Corporation who really moves more than the market. Monster Energy is almost 1. Next, another value indicator could be to look at the book value per share. And we can see here from that perspective, all of them are considered overvalued, which is not surprisingly. We can also look at the relative strength index for the last 14 days. And if this number is below 30, it means that it's oversold and therefore undervalued. If it's above 70, it's considered overbought, and it's a signal of that it's overvalued. So all of them are in the middle of this. However, I would say that quite a few of them are slowly touching in the region of the 30s, and that could be a signal that some of them could again be undervalued. But as of today, there's no clear indicator of this from this perspective. Last, what is the analyst perspective on these companies? I don't follow them blindly, for sure not, because they sometimes have their own agenda, but I like to stay on the same side of them if possible. So again, all of the companies has a buy rating except Fish Energy, which has a sell. Again, not as many analysts are following these stocks compared to some of the other ones. If we look at the price target upside for these companies, this is based on the consensus price target, which is kind of like the middle ground of all the estimates that they're coming with. We can see that they believe that there's more value to get in Coca-Cola, Pepsico, KDP, while as there's less value to get in Monster Energy and Fish Corporation on 47.64. Again, really surprising number here. So again, just to round up the status overview, we can look at the intrinsic value and the overall value assessment based on all the parameters we just saw. And we can see that Coca-Cola, Pepsico, and KDP are from this perspective considered undervalued, while as Monster Energy and National Beverage Corporation are considered overvalued. Then we get into which ones we are recommending as the top picks, and these may come out as a small surprise to people given what we just saw on the previous slide. However, based on the fact that this company has an acceptable net profit margin of 12.59%, it has a superior return on invested capital of 57.35%, it has a solid levered free cash flow margin of 15.38%, no long-term debt, and attractive future growth. we believe that actually the best top pick will be National Beverage Corporation. I'm really surprised that the 3 analysts following this company has a sell rating on it and they have a downside estimate on 47%. I don't know if this is because they haven't updated their estimates for a long time, but I really see this company as an attractive play compared to some of the others. May not move into this stock immediately, maybe waiting to see if there's coming a small dip, but I believe that there could be good value to go with this company in the future. The second option that has been selected is Monster Energy. This is purely based on the numbers that it is showing. However, it is a bit discomforting on the PE ratio, which looks really high. So again, I will not jump into this stock as of today, but it may become attractive at a later stage. As mentioned previously in the video, for dividend value investors, Coca-Cola and Pepsico may be good choices. However, going with these companies, you should not expect any crazy growth from them. This is all we had for today. Hope you enjoyed the video. Please comment, like, and subscribe for future content. If you have any suggestions for improvement, please let us know in the comment section. Also, check out our Patreon page where there's a lot of additional numbers and value to be gained that is not being shown in this video. So we will urge everyone to take a look at that. Otherwise, we wish you a good day and stay safe.